Stargell Capital. And I got to start off with my favorite line, right? Stargell Capital is just a better paying 401k. That don't mean get rid of your current 401k. That don't mean say stop maxing out your 401k, especially if your job and employer or your company is giving you a match. Continue to do that. But what I am saying is, why not diversify? Why not see what else potential possibilities are out there, especially if you don't have to risk a lot of money. Okay, so let's get into the presentation. So it's important to understand that we are a money management company. We are not in the trading business. We are in the money management business. So Stargell Capital isn't a get rich quick. We're not trying to take your money and flip it into 100,000, 50,000, and 40,000 in a couple months. All right, that is not our goal. All right, our company focus, our company mantra is making your portions grow into paying your living expenses. See, you have to understand as well. Mistakes happen when the focus is on making money. I call that the trading business. How? Because I was once in it. You know, just focus on making money, not understanding what risk I'm putting myself into. Then growth happens when the focus is on understanding money. T. Rowe Price, Fidelity, BlackRock, Vanguard, management business. All right. So every money management business, anybody that's in the financial markets, understand there are different markets. Okay. You got this currency, the stock, real estate, bonds are all financial markets. You have traders in those markets. You have managers in those markets. You ever heard Vanguard say? You ever heard T. Rowe Price say, "Hey, we have stock traders over here. Come on, let us trade your money." No, that's not their verbiage. Why? Even though they're trading stocks, they're not in the trading business, so they don't use that. So Stargell Capital expertise is in the currency market, and it's very important to understand we're not traders in this market. We just manage in this market. As a money management company, we understand all financial markets have exposure to risk. Knowing this principle, we limit our exposure to only moderate and low risk exposure. If you ever go, like I say, to the traditional money management companies, they have a risk level. All right, you might see a number 5, 4, 3. You might see words higher, moderate, lower, lower, highest. Okay? And then they just letting you know if you buy into this fund, whatever approach or method that this fund use, you're exposing yourself at this type of risk level. Okay? Same with us. And of course, our focus, our mantra is turning your portions into paying for living expenses. So that means if you only had $250 to start your brokerage account with, all right, our goal or our focus is at least getting it to $2,000 a month living expense so you can live. Okay? Pay for your rent, pay for your mortgage. You're not being rich, you're not making millions, but guess what? $250 is equivalent to your mortgage now. All right. So we see 500. You see 1,000 or 2,000. Okay. Now again, this don't happen in 2 to 3 months. This don't happen in 4 months. It could take years to happen. But guess what? It's okay because in the investment world, money is not even the biggest thing. It's time anyway. Okay. Let's go to the next slide. I always tell people inflation isn't a problem. It's only a problem if you're on the wrong side of it. Let's be honest. So money is a tool without instructions on how to use it. It don't come with an instruction every time you get a dollar bill. In other words, your $500 is not $500. It's either $400, okay, or $6,000 to $1,000 a year. It's no in between. That means for every $500, you should have bought you 6,000 plus a year. The key is to use your tool, money, to make $1,000. The effect of that is you're spending from growth, not less from than you actually have. So I don't mean you don't have $1,000, but because of inflation, your $1,000 have the buying power of $900 now. That's what I mean by that. All right. So what is a low risk exposure? What is that? How do you name that? So what we call low risk exposure, also classified as 5-star trades. Now the pros of this is you have a higher probability trades in the market. These trades generate 17 to 20% per trade. All right, you're taking little risk in the market, and of course there are lower risk trades. The cons are these trades are not always available to take. Sometimes they show twice a month, once a month, or not at all in a month. It will take longer to reach targets, but it's the safest way to ensure hitting targets for you. Okay, so basically, I'm gonna give you an example. You have $250, and we're gonna show you what it'll happen in 2 years, 3 years, and then let's say in a year, it don't start off with a lot of money. So we're talking about $60 a month, $80 a month. All right, and we only making 12 moves per year on your account. 12, let's say to 15. Why? because we're in a low risk exposure. That's the plan you chose. So let's say at the end of the year, you have roughly $2,000, and that $2,000 paying you $400 a month in passive income. You might say, hey, that's enough. I can pay my car insurance with that. I'm fine with that. Or you might say, hey, it's 2,000, but I understand it came from 250. I want to let my money keep compounding into next year. And you have to understand, we do not control your money. We just manage it. This money is in your own broker account. You can withdraw at any time. So of course, year two, you have $2,000 in your broker account, and now 4 months, 5 months into the year, your account will grow to 4,000, 5,000, paying you $900 to $1,000 a month. That might be perfectly fine for you. All right, if that is, look, that's fine. You don't need everybody don't need $50,000 and $60,000 a month. You might only need $900 or $1,000. Okay, but let's say you keep letting your money compound and grow. At the end of the year, your account will be around $19,000, paying you around $3,900 a month. You might be okay with that. Well, let's say you want to keep compounding. Year three, now we get to the big boy numbers. We're talking about the 6,000, the 12,000, the 17,000, the 29,000, the $30,000 a year. Now I'm gonna be honest. Most people probably don't need $20,000. Don't care for $17,000. Might not never get to that. Not because we can't provide that level of expertise and help you get to that goal. It's because some people might say, "Hey, I have $28,000 in my account now. It's paying me $5,000 a month, over $60,000 a year. I am great. I don't need 11,000. I don't need to get greedy." Okay, and I love this as well because it's showing people everybody don't need 41,000 or $100,000 to start with, because the biggest thing in the financial world isn't the capital you start with, but it's the time. So you can let time keep compounding your money, and you're gonna get to the 40,000, to the 100,000, to the $5,000 a month, to the $20,000 a month, if you just let time do its thing. Okay. 5-star expectation. To the right is a virtual account for demonstration only of what to expect. This one move in the market netted 28%. And it's basically a gold trade. All right. So even if you have $1,000 and we make, let's say, 12 moves per year, or 12 to 15 moves per year, all right, you'll be around $8,900. Okay. So now your $1,000 is worth $8,900 a year. You'll start looking at your money very different in how you're using it. Okay. Moderate risk exposure. A client can say, hey, I want things a lot faster. It's only $250. Hey, why not? I want to see the possibilities. Now they choose the moderate risk exposure plan. So what this is, I classify this as 4-star trades. Now anything under 4-star trades, I particularly do not participate in. Why? Because I don't like risking a lot of money myself. I personally put the plan with Stargell Capital. I have 4 and 5-star trades. All right, but you can choose 4-star trades, which automatically give you 5-star trades as well. So in this, you got a moderate probability trades in the market. These trades so often in the market, you will have 1 to 3 trades a month, and you have the ability to hit targets faster. Okay, like I said, you put yourself at a moderate risk as far as from an exposure level, but it do have cons. These trades are more risky. Okay, you have a higher probability of losing a trade. That doesn't mean you're gonna lose a trade. That doesn't mean you're gonna lose your money. But I'm letting you think not from the typical perspective, but think as somebody who's managing money. If I'm taking or being more aggressive or taking more moves, I have to be putting myself at a higher exposure level. Okay, so that's what I just want you to understand. If you choose the moderate risk exposure, I have to let you know you have a higher probability of losing a trade because you're exposing yourself more in the market. Okay, so in year one, let's say somebody has the same $250, but they choose this plan. Now they just have a 12 months basically, but now this person having 2 to 3 months, 2 to 3 moves per month on their account. So like I say, let's say in half the year they're around $900 or $1,400 a month. Their account is at $2,000 or $3,000. This person might say, "Look, I'm getting paid $1,400 a month. I got $3,000 in my account. I'm good." They might not even get to see the 19,000 or 13,000, the $4,000 a month, the $8,000 a month. That might not even be their goal. They have businesses. They have a great job. They have other investments, 401ks they matching out. All right, they might just be cool with 1,400. But let's say another person want to go to the next step. So in year two, we get to the big boy numbers. Okay, now you do see the high 6 figures. You do see the $30,000 to $20,000 a month. Most people never get here. Why? Because you really think when you start seeing, we talking about $6,000 a month, $8,000 a month. Most people, and this is fine, will say, "Man, ain't no need for me to be greedy." Okay, I'm cool with where I'm at. I can keep my 13,000. I can keep making my $6,000 a month. I can keep my 19,000. I can keep making $8,000 a month. But if you let time do it thing, it is something on the other side. Now I do want to say this: my grammar is not correct. I'm not great at literature, but I'd rather say I is rich than I am broke. Okay, any day of the week. Okay, so let's go ahead. What is the expectation of 4-star level? So to the right is a virtual account for demonstrations only of what to expect. These two moves in the market have netted 40% for the month. Okay, so if you have $500 with two moves per month, in 1 year your $500 is worth 39,000. Now, can you have more than two moves per month? Of course, because remember you can have 4 and 5-star trades on your account if you choose the moderate risk exposure. Now, disclaimer: these trades have a higher probability of closing in red. Why? Because you're exposing yourself more to the market. Okay, not you're doing it, but I'm saying the activity on your account is having more exposure in the market. Okay, as far as us managing it for you. So without Stargell Capital, the amount you'll need for the same income, $2,500 a month, you'll need 944,000 at a 12% return. Now that is, decent numbers, great numbers. We talking from a traditional perspective, but let's take out traditional perspective. If I tell you, hey, give me 944,000, I give you $2,500 a month, you would tell me you have lost your mind. What do I look like, right? But since we made this a norm in the financial world, right? People say, okay, that's great. Now, of course, to get $6,000, $10,000 a month, you need up to $2 to $3 million. Okay, most people, even though they can accumulate that, most people not willing to really put $2 to $3 million in the market to generate those returns. They'll probably do something else with that money. So then a historical performance. I told you earlier, I used to be in the trading business. That doesn't mean I didn't know what I was doing, but it's a difference between a trader in any financial market and a manager in that market. What the trader do is he's trying to make profit. He don't understand how he's exposing himself. Okay? He don't understand, look, I can make money doing this with this approach, with this method, but I don't understand I'm putting myself at a very high risk of exposure in this market. Okay? So sometimes I win, sometimes I lose. It's like a seesaw. They don't understand yet. Okay, that's like McDonald's. That was in a restaurant business, okay, or the industry. That was in a restaurant industry, in the restaurant business, and barely getting by. Until somebody told them, hey, you're in the wrong business. Stay in this industry, but get in a real estate business in this industry. Then you see McDonald's for what it is today. It's the same thing I had to realize. So what I'm going to do is I'm going to click on the fund, and I'm going to see if it can take me. Okay, it did. So you can see the historical performance for yourself. Now, of course, you can see this say negative 0.06. Why? Because I don't trade on this particular account anymore. I trade for proprietary firms, but I want you to see I do have the data to back it up. Let's say that. So basically, you can see now 2021 negative 48%. I was a trader. I'm not gonna lie to you. I'm in the trading business. I'm trying to make money. All right, taking very high risk. This trade that I took had to be a 1 level trade. I'd be generous to say a 2-star trade, not because I lost, but because I didn't understand my exposure in the market at that time. I was a rookie. All right, so then you see 2022, and you see now 13%, 17%, 18%, 21%. Okay, at this particular time, I started understanding more from a financial principle perspective. So it never was my skill set, but it was my understanding of money and understanding on how to move in exposure level. Okay, so yeah, it was 48%. All right, brought it up. As you can see, this particular year is probably around 70% or something like that. But you can kind of see that's why it's negative 0.06 instead of still negative 48%. I just haven't took or made any moves on this account since May. Okay, so now you can kind of see the growth. So I always tell people I didn't start off great. I started off like anybody else. Let me see. I might have to force quick. Give me 1 second, because here this thing just going crazy again. I didn't start off I didn't start off great like anybody else. I had to learn. So I'm not talking from the perspective of just winning all the time. I'm talking from the perspective of experience, and so it's a little different. Okay, so I was just trying to stall time to get back to this. All right, so now you see the second fund on this particular account. I kind of got bored as far as trading with a proprietary firm. Open another account. As you can kind of see, they say 71%. Scroll down, you can kind of see I only took a trade on this account in 1 month. This was in April. And 71% for the month. These particular trades were 4-star level trades and 5-star put together. 71% for the month. And so it's like 3 or 4 moves on this particular trade. You can kind of see it is a real account, not a fake account, track record verified and things like that. So, and basically I started back trading with the proprietary firms after that. Okay, now I'm finna see, and I might got to do this again. Okay, and I'm not tech savvy. All right, so somebody can tell me how not to do all of this. Force and quit, then open it back up to save time. I really would appreciate it. But now let's see if I can get back to the presentation, and we can go further into the presentation. Okay, so now, alrighty. You'll see we have 3 pillars. Our 3 pillars is supplementing your income, meaning just give you some extra cash flow on top of your regular income to enhance your lifestyle every month. It could be extra 500, 1,000, 15, 2,000. Then we want to get to the point where we're taking care of your passive income. Whatever your major expenses is, Stargell Capital want to get to the point where you see the value where your money managed with us is actually taking care of your expenses. Then of course the financial freedom income. It is don't I say 10K plus a month, but the number is different for everybody. I'm just saying we get to the big boy numbers. If that is your goal, that is your target, we help you achieve that. All right. We make sure we're providing value to every client because every client is different. Okay. Then of course, how are we getting returns? As any money management company, Vanguard, Fidelity, T. Rowe Price, returns are generated in certain financial markets, the stock market, real estate, or the currency market. We currently generate returns in the currency market. Banks are more involved in the currency market more than companies are. The currency market isn't more superior than other financial markets. It comes down to which financial market we understand more. Understanding is equivalent to superior results. Okay. I also want to say most people that you know involved in the currency market now, you hear them as forex traders. I'm a forex trader. That is not me. Okay. I'm not a forex trader. Okay. I'm just managing in this market. We're not the same. We do not have the same mentality. And not no diss to them, not saying I'm better than them, but we just have a different approach in this market. Okay. Our expectations from you. First, you do have to open a broker account. There's plenty of brokers you can choose from. And this is critical because we don't control your money. We manage your money. Therefore, we have no control over deposit and withdrawals on your account. Account minimums, you have to start your account with at least $250. Fees, outside of starting your account with $250, what will you pay the company? $250 as far as a startup fee, and then we do charge a performance fee of 20% as far as profits that we perform on the account. So let's say you have no profit on your account. We're not charging you anything on a monthly basis. No profit, no particular pay. Now, of course, our fee is higher than a traditional money management company because we give more than traditional results. Let's be honest here. Then, of course, you have to complete an onboarding package. This allows you to determine your risk level on your account. Onboarding packages must be completed before we start managing your money. All right, then of course a disclaimer, you can kind of read that yourself. We're not telling you do this. Always consult with somebody. And we're not saying because we have historical performance, it does not guarantee we'll do this in the future. Okay, any investment involves risk, and you could lose your principal. And I don't like over promising as far as saying you're not at any risk level because that's just not true. In any investment, you always have a risk level, and you have to make sure you understand the risk level you're putting yourself in. Okay. Now, again, one more thing I didn't put in here. Every month you will get a kind of like a bank statement. You'll get a statement with your broker account, even though you all able to see it and I don't have access to it because I'm actually managing on behalf of you in the currency market. I can still print out whatever moves was actually made on your account every month, and I'll just send that to you just to why not? You want to see the financial freedom vibe. Let me check my investment statement for the month. We want to give that vibe to you. But other than that, if you have any questions, feel free to hit me up after watching this video. I hope you enjoyed the education and not the glitter and the glamour and seeing the big numbers because it's about educating yourself before making a decision. And I look forward to hearing from you soon. This is Trey Stargell with Stargell Capital, and let's continue to create.